How to treat your trading as a business.
Good evening, I'm Michael Weissman. You met my partner Jay Meisler, the brilliant creator of the Amazing Trader algorithm. We both believe the best way to teach our clients our program is to demonstrate not just how it works, but why it works, and to do so in the simplest way possible. Jay did a great job of explaining the logic behind the algorithm and the proprietary lines it produces on your charts. But that's only one part of the process of trading. The second, equally important part is understanding and applying a solid risk management system to safely grow your account. Trading can be broken down into two parts. First, you need a tool or set of tools that you can rely on to find potential trading opportunities. We'll be using the Amazing Trader for that. Second, you need a risk management plan that takes advantage of margin while also protecting against large drawdowns. We'll address that with our Trading as a Business program. Before we start, you must understand that every trader and every trading system suffers losses. Markets are very fickle and can change direction at any time and without any warning. There are too many reasons why it could happen to even worry about. You just need to know it happens, and even great trade setups will fail at times. Knowing this, can we identify a business model that can successfully handle frequent and random losses? Well, we sure can. It's only the best business model in the world, and that's a casino. Well, why a casino? Because in every game the odds are on the side of the casino. Not huge odds, actually small margins of about 2 to 3%. Why so small? Because casinos are not greedy. They're smart. They understand players will win, and sometimes big, but they know the odds will play out long term, and in the end, they'll make their 2 to 3%. With so much money floating around at all times, a very robust risk management system must be in place and enforced. Examples of this would be size limits on bets, monitoring the credit given to players, hidden cameras, security guards, chain of custody on chips and on cash, and more. You should run your trading business like a casino. To put the odds on your side, we'll use the 3 Amazing Trader strategies you learned about in Jay's lessons. These strategies, if followed correctly, have a high probability of success. However, for our plan, we only require a 50-50 won-loss ratio, so there's plenty of room for error. Because we'll also be working on small margins, as you will see in subsequent slides, we will be relying on volume as well to meet our goals. Finally, we'll also have our own very strict risk management system in place. Before we go on, let's discuss what I refer to as trader killers. Controlling fear and greed is the biggest obstacle to becoming a successful trader. Fear of being wrong might make you pass up a good opportunity. Fear of taking a loss might propel you to move your stop loss, or worse, trade without one altogether. Fear of missing out on a trade might cause a rushed entry. Fear of turning a winner into a loser might make you take profits too early. These are battles traders fight every day. On the other hand, greed can also cause disastrous results, the biggest one being over-leverage, which is guaranteed to blow up your trading account. Trading during news hours, that's gambling. That's not trading. Our risk management program will eliminate your fear and greed from sabotaging results. So you're watching charts and an Amazing Trader setup appears. Now what? Step 1 is identifying where you will put your stop loss, which will be behind a key Amazing Trader line. Which line will depend on which strategy you are using. We will limit our risk to 1% of the account. You'll need to convert 1% to a number in pips or points or dollars, which will vary among FX, CFDs, cryptos, and indexes. We'll set our profit target to 1.25%. We're going to wait for the price to get within our risk tolerance, and then we'll place the trade. Then we'll just let that trade either hit the stop loss or take profit. There's nothing to manage, no emotions, no trade killers to interfere. Now, efficient use of capital is also critical if you're looking for large returns. As with a casino, our plan excels with volume, so if our goal is a 1.25% profit, we'd like to make that profit in as short a time as possible. This way, you can turn your capital over more times. Let's see how that can work out. The Amazing Trader program has 2 levels. There's the Master Level 1 to proceed to Level 2. Now, are you ready to grow your account? We'll use a $10,000 account as our example. Now, everything is relative, so you will adjust your amount to work with your account balance. Okay? Our risk is 1% or $100 per trade. Our target is 1.25% or a profit of $125 per trade. Now, in reality, you'll be setting your stops in pips or points, as we discussed, so you will need to convert that to dollars. For instance, one standard lot of the Euro-US dollar equal $10 a pip. If your stop loss is 10 pips, then you could trade one loss as 10 pips times the $10 per pip is your $100 risk. If your stop loss is 20 pips, then you could trade a half a lot, as 20 pips times $5 per pip is still the same $100 risk. You get the picture. Bottom line, the number of pips or points times the value of each pip or point should equal your risk. Now, we talked about volume, so we're looking to do 5 trades per day, or 20 trades per month. Or 100 trades per month. Look at the results as follows. For 100 trades at a 50-51 loss ratio, we're going to have 50 losses, which will be at $100 a piece, is minus $5,000, but we'll also have 50 winners at $125 a piece, which is $6,250 of profit. Leaves you with a net profit of $1,250. That's 12.5% for the month, which equates to $15,000 a year, or 100% or 150% return. Now that's not bad, right? But wait. As we get to level 2, we'll expect you. In level 2, we expect you to just make marginal improvements in performance. Let's look at what happens if instead of a 50-50 won-loss ratio, we increase that to 60-40. This is very achievable using our strategies. At the same time, instead of 1.25 to 1 risk reward, we're going to look for 1.5 to 1. Also, very achievable with our program. As you can see, on the same $10,000 account, also only risking 1% per trade, our returns are now supersized. Now, 40 losses at $100 is minus $4,000, but 60 wins at $150 is plus $9,000, leaving a monthly profit of $5,000, or 50% per month. That's $60,000 a year, or 600% on a $10,000 account. This is how you grow an account while managing risk. Now, you might ask, why not just start at 1.5 to 1? The higher the reward, the more difficult it is to achieve. The key to getting to 1.5 to 1 is not just setting 1.5 to 1 at the outset. It's about managing your trade by using the Amazing Trader lines to determine when to exit. This requires more skill and time in front of your computer watching charts. Refer back to the Amazing Trader ladder strategy to see more. Now it's time to personalize. People have different financial goals and time to devote to trading. You have to align your goals with the realities of the market. There are some times that offer more opportunities than others. There are times to not trade. And if you want the results just discussed, you have to know which time frames to use for your entries, how to size your position, and how often to trade. The most trade opportunities occur, and the market is most active generally when more than one regional market is open. Best hours usually coincide with London, as you get the close of the Tokyo market with the London Open. The 4 hours that London and New York are open at the same time are prime time. There are certainly trades at other times, just not as many, and moves in general are more muted. You also need to know when to stay out of the market. Markets tend to have severe reactions to planned economic news releases. Things like interest rates, jobs, inflation, GDP, and more can disrupt markets in the short term. Having a position on with news coming is gambling. That's not trading, and it's best to sit on the sideline and let the market settle for about 15 minutes or so before you look to trade. Think about golf. If you lost money on every bad shot. Why would you ever play in unpredictable and windy weather? A perfectly hit shot, in our case a great trade setup, right at the pin, gets hit by a sudden wind gust. In our case, that would be a news event, and gets blown into the woods. Now you're stopped out of your trade. Play when the weather is normal and when the conditions are more predictable. The Amazing Trader works the same on all instruments. What's most active during the time frames you're available to trade is where you should focus. Now, as for which charts to use to enter, this all depends on how much time you want to spend trading. If you have time to watch charts, then use the shorter time frames. If you only have a little time every day, use the longer time frames. And for a reference, let's look at where we're going to place our stops. Our stops, in general, will be 10 points when we use a 5 or a 15-minute chart to enter, 15 points when we use a 30-minute chart, and 20 points when we use a 60-minute chart. That's just a general rule of thumb. Well, and as far as how often to trade, well, that depends. How much money do you want to make? The more trading you do, the better. We've discussed a number of times in this presentation that this is a volume business. We work on small margins to reduce risk, and we rely on volume and statistics to make our money. As long as each trade you do follows an Amazing Trader strategy, do as many trades as possible. So to summarize, every trader has losses. Fear and greed rule. They must eliminate those trading killers. Trade with the probability on your side, and we're going to use the 3 Amazing Trader strategies for that. You identify a stop loss based on which AT strategy you're using. We're going to risk 1% of the account. We're going to set a profit target of 1.25% of the account. We're going to try and trade during major market hours. We're going to avoid entering positions around key news announcements. And we're going to trade as often as possible, because the more trades we do, the more statistically reliable our results are going to be, and the more money we're going to make. So that's it for this video. Now in the next video, we're going to put all of this together, and you will watch as I demonstrate exactly how to apply our business plan that we just went over to the 3 Amazing Trader strategies Jay and I use every day. Looking forward to it. We'll see you soon. Thank you for your time.